Welcome and good morning, everyone. Thank you for joining us today. I'm Nikki Jovicic from LookUpStrata, and for this webinar session, I'm joined by Tyrone Shandiman from Strata Insurance Solutions. This is not the first time Tyrone has joined us for a Q&A insurance webinar, and I'm sure we will have many more. Thanks for joining us today, Tyrone. In the national webinar, we'll be talking about Strata Insurance. Strata Insurance is a necessity for strata buildings. Not only is it required to protect the livelihood of lot owners, it's also a requirement to have by law. While Strata Insurance in various states provides guidance on what insurance should be taken out and how insurance should be facilitated, many questions arise about the interpretation of legislation and the insurer's policy terms and conditions. While Strata Insurance should be easy to arrange and facilitate, complex questions can arise that require further advice from an inexperienced Strata Insurance professional. Please feel free to share this video with neighbours, committee members, other staff members, or anyone you think may be interested in the information. Before we begin, I'd like to mention that the information contained in this session, including the discussions that arise from submitted questions, is not legal advice and should not be relied upon as legal advice. You should seek independent advice before acting on the information contained in this session. Okay, so by way of introduction, your Strata Insurance questions today will be answered by Tyrone Shandiman from Strata Insurance Solutions. Tyrone began his insurance career in 2004 working in various roles within the finance services industry. In 2011, Tyrone established an insurance broking practice from his garage, providing a wide-ranging service offering for general insurance. Since then, the business has grown to service more than 500 clients, with a team of 4 and a strong specialisation in strata insurance. Tyrone's key focus in his business is building long-term relationships by servicing clients in line with the key principles of advice, value, trust, and choice. Tyrone manages all operational aspects of Strata Insurance Solutions and is involved in complex and technical matters related to clients' insurance. In 2016, Tyrone was awarded Queensland's Young Insurance Broker of the Year. This is awarded to insurance brokers under 35 who exhibit an outstanding level of professionalism and integrity. Tyrone is also a regular contributor to the LookUpStrata blog, providing articles plus answering many of the Strata Insurance Q&As we receive in from you, our audience. Now, we have a lot of blog articles on the LookUpStrata site, and before coming on here today, I checked our posts, and Tyrone has authored or co-authored around 50 articles on our blog, which I think is amazing. Welcome, Tyrone.
Thank you. Thanks.
Okay, we've received lots and lots of questions in, so we might just jump straight in and get started if that's okay with you.
Yep, let's go for it.
All right, the first one that we've got is from Queensland, and the question is, in April 2020, a hailstorm impacted the Capricornia region, and a number of buildings managed by our office had damage claims requiring re-roofs. 2 buildings were insured with insurance company A, and as we approached their renewal date, this company advised they were withdrawing from the market and no longer offering the product. Because of the open roof claims, no other insurance providers would consider a policy until such time as the repairs were completed. One building is set to commence repairs in May and the other in September. My question is, how do you secure building cover in a situation like this? We asked for an exclusion and were denied. We approached the financial ombudsman and were also denied on the basis of being a commercial matter. In this situation, is this situation common following natural disasters where repairs can be a lengthy process?
Yeah, good question. So look, there are very, very rare occasions where a building cannot get insurance. And essentially with certain parts of Australia, Capricornia being one of them, they have a higher exposure to cyclone, and that makes it so without the claim and the damage, it's already hard to get insurance, and then adding on that extra level of complexity with the cyclone damage can sometimes mean that buildings can be very, very difficult to find insurance. Now, in all states in Australia, there's a requirement to insure for full rebuild value. Essentially, what the committee needs to do is satisfy that they've done all reasonable things to try and ensure for rebuild value. Now, what that would mean in this case, I would suggest would be going to a number of insurance brokers to start with, and asking them to seek cover on the market, which would include markets such as Lloyd's of London. And then in certain states, you have, if you can't comply with the legislation, there are processes in place to which, for example, in Queensland, if you can't comply with the legislation, you need to go to the commissioner and seek approval for non-compliance of the legislation. So there are buildings out there, unfortunately, and I've seen it a couple of times, that just cannot get the insurance. It is unfortunately one of the, it is a sore issue. From my perspective, we are in the process of setting up a lobby group at the moment to lobby government and insurers to do more for those in northern Queensland and cyclone regions, and Northern Australia, in fact. But until such a time the government can stand in and do something more for policyholders, there are going to be examples like the one in the question where buildings are not insured.
Excellent. Thanks, Tyrone. We'd really like to hear more about the lobby group as you push forward. So please let us know and keep us posted.
Absolutely. There'll be some news coming out in the coming weeks. So yeah.
Excellent. That's great. Yeah, we'd love to push that out to our audience. I'm sure they'd be really interested in keeping an eye on how that's progressing.
Very good.
Okay, Jill from New South Wales. Some owners in our strata building wish to install ceiling installation bats in our roof cavity where there are many cables and electrical wiring. Do we need to alert our building insurer about this proposed work? I'm concerned the installation of bats may increase fire risks in the ceiling cavity, given the presence of all the cabling. Our building is 60 years old and has older wiring.
So there's no specific requirement that you must notify the insurer every time you do something to the building, all right? When it comes to your disclosure requirements, firstly, you must answer all questions the insurer asks you with regard to arranging insurance. I don't believe that they will ask specifically about whether the bats are installed, about bats that are installed. The second thing that you must do is you must disclose all things relevant to the insurer's decision to insure you, all right? So what the committee really needs to do is, if they become aware that the installation is non-compliant, right? That would be from a professional builder. They would need to disclose that to the insurer. But if you're concerned but don't have anything to support that the installation wasn't compliant, then there may not necessarily be a need to disclose that to the insurer, because provided that the builders have put the bats in and they comply with the applicable, building regulations and codes, then there would be no need to then disclose the additional bats in the ceiling to the insurer.
Okay, thank you. Another one from New South Wales. This is Robert. Does it make any difference to the strata insurance if the property is rented? Strata insurance is for the common property, so does this make any difference if the lot is a short-term rental or a long-term rental?
The long and short answer is yes and no, okay? So first and foremost, looking at rental, not short-term rental, there's only one insurer in the market that likes to know the split between owner-occupied and tenancies, and they do apply a very, very small discount where there's more owner-occupiers in the building, or a certain percentage of owner-occupiers. When we look at holiday letting, that also really, insurers have guidelines around holiday letting as well. When it starts to get over a certain percentage, they then start to look at the building as a commercial building. From my perspective, from a risk point of view, I kind of see short-term holiday letting and owner occupiers and rentals as being a similar risk to the risk profile to the building. So I don't see more claims coming in for buildings that are are holiday let as opposed to ones that, or more or different claims from holiday let buildings as opposed to ones that are tenanted long-term or owner-occupied. So I guess really it's only when you start to have a high percentage of holiday letting that you might see the premiums increase from the insurer's perspective.
Okay, great. Sorry, I'm just finding my place back in the document again. Okay, so we've got one from Robin from WA. If a strata company cancels its insurance in March 2016, can it still lodge a claim against that policy if legal action is commenced within the statute of limitations for something that occurred prior to March 2016?
It does solely depend on the policy terms and conditions. If the policy in 2016 was an occurrence policy wording, and it covers events that occurred during the policy period, then you would have the ability, there's no limitation on how far back you can lodge a claim. So as an example, if you have a public liability incident where someone has slipped and fallen over in 2016, and they've had some complications 5 years later and they decide to sue the owner's corporation, the policy in force at the time would be the policy that you seek to take cover for. Now, there are other sections within a strata policy, which is a claims made policy, all right? So a good example of a claims made policy is the office bearer's liability section and the legal defence expenses section. So those sections say that if you had a claim in 2016, the policy in force today, the day of notification, is the policy that responds. So you'd need to seek advice from your broker or advisor on which policy to specifically look for. Just be mindful that if you're looking at the claims made policy, so today's policy, you may have some disclosure issues if you failed to disclose a 2016 incident that you were aware of. For that particular incident, I'm happy to take that question further offline with the questioner. If they did want to ask further questions, you can contact me through our Strata Insurance Solutions website, and I'm always happy to give LookUpStrata readers and listeners free advice around their insurance as well.
Excellent. Thank you very much, Tyrone, and we always appreciate that. Okay, one from Queensland. This is from Andrew. Our complex is currently organising a continuation of insurance. Buried in the renewal submission, it says the body corporate management company is entitled to a commission. The submission states, if the body corporate accepts insurance company B's recommendation and instructs us to place covering accordingly, the strata management company will receive a commission of around $2,500. Is this commission appropriate on top of all of the other fees they charge?
I think that that's really a question for the owners corporation, and one of the benefits of the new legislation is that there is a higher requirement for disclosure of commissions by strata managers. What you can do as a committee, I guess you have the power to make decisions around the purchasing decisions around insurance, I would recommend all committees not just allow the strata manager to get quotes, but seek quotes from other parties. We find in some instances that just on the commission alone, the difference in the premium can be as much as 20% when they insure through our company because we don't pay commissions to strata managers, versus the strata managers company where there is a commission embedded into the premium. So I guess whether it's appropriate, it really comes down to the discussions that you have with the strata manager around the arrangements of your strata management contract. Obviously, contracts renew every 1 or 3 years. So if you feel that it isn't appropriate in the circumstances, then it's definitely a discussion that you would have with the strata manager. Now, one of the things that is a common point raised, which is a bit of a misconception, is that dealing through a broker that's not through your strata manager imposes a high level of work on the committee. Our company doesn't pay commissions to strata managers, but when we deal with the insurance, we deal directly with owners on claims. Essentially, the only additional work for the committee and strata managers should be limited to referring clients to us to lodge the claim and dealing with any funds in and out of the body corporate bank account. But from the lodgement of a claim, we deal directly with the owners. So just be mindful that arranging insurance through parties other than your strata manager may not necessarily impose more work for the strata manager or committee.
Okay, and I'd just like to jump in there too, if I can, Tyrone, and state that because this is a national webinar, which is a bit different to the other ones we do, we usually do state specific, but we've chosen this topic and we're addressing it nationally. And it's just to let you know that the answers that Tyrone's given, and Tyrone, you could probably confirm this, are based on the state that legislation, the legislation covering the state that the question was asked from. So it might be a little bit different if you're living in another state. And then we've just had a question also come in from New South Wales, which is similar to the one that you've just answered, but I'll ask anyway, just in case there's a slight difference in the legislation due to the difference in the states. So what is the position regarding commissions payable to the broker or the strata manager? Are we entitled to know the rate of commission paid?
Absolutely. So as the client, the broker has a duty to disclose that to you. You should definitely ask what the commission structures are. I know that in New South Wales, it's required to be disclosed, the commission structure, on AGM papers. What you may not find disclosed fully is that there can be profit shares which are not classed as commissions, which are buried in financial services guides. But if you know what the commission and broker fee the broker gets, that will help inform you around whether it is or isn't reasonable. The standard industry commission within a strata policy is 20%. But what we are finding at the moment is that some commissions are as much as 20% commission and 20% fee. And obviously that has a very, very big impact on the cost of insurance for the lot owners. So I would always suggest informing yourself, asking the strata manager and broker to provide transparency around their fees and commissions.
Okay, and we had a couple of comments come in. I think it's a New South Wales strata manager from what I can gather. And Debbie's just saying strata managers normally include the commission as part of their base fee. Base fee is normally set with the understanding that this would be received, and if not, then the base fee will go up. And then she also comments, New South Wales commission percentage has to be disclosed in our agency agreement.
Yeah, so it is disclosed. And look, obviously this is, you know, these are commercial discussions you have with your strata manager. I know that there are ones out there that, you know, don't take commissions and are happy to discuss the fee. And maybe what it means is that their fees differ to those that do include a commission into their strata management fees. So it's definitely something. I think the point I'm making is know what your fees and commissions are. And obviously your contracts come up every 1 or 3 years. And those are things that you can discuss with your strata manager in the renewal of your contracts.
We do have a lot of questions that come in around commission, so it's great to have a discussion on that. Okay, we also have another one from New South Wales here. Can the strata plan secure more than one broker's quote for our strata plan's annual insurance coverage? Our broker advised us that we can only go through one broker.
So that's not correct. So we obviously, being a broker ourselves, compete against other brokers for the insurance. I guess there are certain insurers so the holding insurer that holds the insurance policy will reserve specifically to the broker that insures the policy through them. And there are some insurers that will reserve to one broker at a time as well, okay? But there's absolutely no reason why the Owners Corporation cannot seek the services from two brokers and tenders from two brokers for the insurance renewal.
Fantastic. Okay, we have lots of questions as well coming in from duplexes because I think people are looking after them themselves, and so there's lots of confusion there, so especially around insurance in all states. This one's from New South Wales. If there is no owners corporation in a duplex and both lot owners simply pay the annual insurance premium, are both lot owners legally and fully covered by the strata policy? The other lot owner in my duplex does not want to form an owners corporation and will not pay for a strata management company. They have a tenant renting the property. The insurance company say they will not email me with confirmation that we are indeed fully and legally covered, but they will send a copy of the policy when the account has been paid. I'm very upset and worried about this situation.
Yeah. And that's a fair and reasonable question. So the first thing is that you have a requirement in New South Wales to insure for full rebuild value. Now, the best way to ensure that you comply with that requirement is to get an insurance rebuild valuation done by a quantity surveyor. The next requirement is to ensure that you have public liability for a minimum of 20 million in New South Wales. Provided that you're meeting those two requirements, I guess on a base level, it does comply. There are obviously other things that are required of the policy, but if it's a strata policy with an Australian insurer, generally their policy wordings will comply with the Act. Insurers will not put in writing, they normally won't go outside of what is already in writing in the contract and their policy wording, right? But I guess the main thing for you as the owner is to ensure the sum insured matches the rebuild value, and you're insuring a strata policy with an Australian insurer. And generally, you'll find that what you've got in place is compliant. And there's no need to engage. Obviously, you can if you want, but there's no specific need to engage a strata manager for a duplex. And whether you do or don't have a strata manager doesn't impact your compliance around the insurance policy.
Okay, we've got a really interesting one from New South Wales. Mike is located in Tweed Heads. We're concerned our property insurance is too expensive based on a total loss scenario. Due to the layout and construction of our scheme, fire hazard and its associated risk is low. The associated risk of the complete complex burning down would be rated as extremely rare or very unlikely based on any reasonable reference matrix chart, as the complex is made up of multiple separate buildings. We are currently insured on the basis that total destruction is inevitable, and with the outcome being a rebuild of the entire site. The risks associated with flooding, earthquake, etc. are rated as extremely low and from a statistics viewpoint unlikely to happen. Is it reasonable to consider cost of strata insurance based on the complex's layout and its subsequent risk assessment other than total destruction? Or does the insurance industry rate our area as per a group of postcodes?
So insurers don't just rate on postcode. I know that a lot of rating by insurers looks at a number of factors, including construction, the number of levels, how many buildings that there are, the roof space. So obviously a greater roof space, there's a high potential for storm damage, or is it a high-rise building with sprinklers and so on? So insurers do look at the building and the matrix of the building. I sat down with an insurer once, and they kind of said to me that they rate on a maximum anyone loss of 40% for certain buildings. So it's not. I guess that what you're saying is probably correct for your building, but insurers, in the questions that they ask, they do form their own risk profile of your building as well, and they do rate on risk, and the premiums are reflective of this. Yeah.
All right, we're jumping over to WA now. We've had several plumbing failures leading to damage to various apartments. This has led to increased premiums and deductibles, with our broker only able to source one insurer. We've sought to minimise future events by seeking to get all apartments to adopt a standard device and turn the water off to their apartment when they are away for 3 days or more. We're looking to update the strata rules. Is there any standard wording we can use? Should we include annual, biannual access for inspections? If the owner fails to comply and this results in damages, can we state the strata's insurer may be able to seek redress from that owner? All recommendations would be appreciated.
Yeah, that's a really good question. Part of this question is a strata management question. So around the writing of bylaws, obviously that's outside of the scope of an insurance broker. But I will just say that you have to be careful as a strata corporation that you're not imposing certain requirements on how an owner maintains their lot. That is the owner's right and responsibility to do so. And I've seen in the past owners corporations and strata corporations that have tried to impose such requirements, and they've been challenged in the relevant commissioner's office. So be careful with that component of how you write it. The best way from an insurance perspective to encourage owners to conduct preventative maintenance is for the insurer to impose specific excesses. So if there's a $5,000 or $10,000 water damage excess for burst pipes, and as a Strata Corporation, you encourage owners to install, shut-off devices and water sensing devices. An owner that is looking to not pay that excess would obviously seek to install those and follow those recommendations of the owners corporation. When it comes to the question of can the insurer pursue an owner for a recovery of a claim in their lot because they didn't install the sensors, the short answer is no, they can't. And you need to remember that an owner is an insured party under a policy. And just as the insurer couldn't pursue you because you failed to maintain your pipe in your house and they paid a claim out, the insurer also cannot pursue a recovery from an owner that is an insured party under the policy. They can for tenants and they can for non-insured parties, but they simply can't do it for owners for that very reason, that they have an insurable interest.
Okay, that's great. Thanks, Tyrone. And we might actually send that one to one of our other specialists here in WA and see if they can provide the other part of the question as well from a legislation point of view. So thank you for that. And there's a few comments that have come in that I think are relevant to what we've just been talking about. I think the previous question, Wal has said, and I think this was from Queensland. Oh, it was from New South Wales, actually. In my experience, quality surveyors overvalue the building insurance valuation and engage a value experienced in these building insurance valuations is better. Engaging a valuer, sorry, I'll read that again. In my experience, quantity surveyors overvalue the building insurance valuation and engaging a valuer experienced in these building insurance valuations is better.
Yeah, correct. And I would elaborate on that. So firstly, I would recommend using a quantity surveyor. And I know that there's a lot of valuers out there that are not qualified quantity surveyors. So you can actually go on the Australian Institute of Quantity Surveyors website and search whether the person that's providing the valuation is actually a registered quantity surveyor. The valuers that we recommend to our clients use a cost per square metre guide, and they use the Rawlinson's guides that are industry respected guides. Valuers or quantity surveyors will not insure you or recommend a sum to the very dollar. They will always allow a margin for error should there be a total loss, because the consequence of underinsurance versus overinsurance is very obvious if there was to be a total loss claim.
Okay, thank you. Okay, I'll just go back to our submitted questions. We had another one from New South Wales. We live in a block of 12 units in Sydney, New South Wales. Last year, we were charged around $500 by our managing agent to obtain 3 building insurance quotations from the broker they use and to insure the building. Our Strata committee thought this amount was excessive, considering the managing agents also obtain a commission. Can a Strata committee obtain their own building insurance quotations and then advise our managing agents accordingly? Does the Strata committee under law have to obtain 3 quotations, or are we able to directly contact and insure with the same insurance company we have insured with over the past few years?
Yeah, so I just want to clarify, Nikki, this was in New South Wales, is that correct?
It is, it's a New South Wales question.
Okay, excellent. And that the reason I asked that is that in New South Wales, there's a specific requirement to get 3 quotes for the insurance. You can every year, so you can insure directly with an insurer. The 2 issues around insuring directly for a committee is, one, who's advising you that the policy is appropriate and correct. You're best using a broker for that, and they're qualified to give advice in that regard. The second thing is who manages the claims and the claim process as well. So you can definitely insure directly. I would, if it was me as a committee member that had no experience in insurance, I would use a broker, knowing the services that we offer. With regard to your charges and commissions and so on, as I said earlier, it's important to know what the commissions are. And I think that really, if you're being charged $500 just to get a quote, I haven't seen that in many strata management contracts. That would be something that I would be looking at when my strata management agreement came due for renewal, to discuss whether that fee was appropriate.
Okay, back to WA. One of the owners in our group is challenging our current valuation as being too high. He believes properties here in WA haven't risen in value for several years. Our broker obtained quotes from a range of insurers, and we, the council of a self-managed strata group, believe we have a good deal. It would cost more to get a full valuation than if we just paid the extra. This equates the extra this equates to in the premium, which is around $60 per unit per year. Is this a fair response to the owner?
So as a strata corporation, you really need to demonstrate, I guess, or the best way to overcome any contest by an owner around whether you're doing the right thing is to ensure that you're demonstrating that you've done your due diligence. Now, for a strata corporation, you should have a valuation done for the building, which would be the basis on which you insure the building for. Now, the question does the question, am I right to say, Nikki, it doesn't say whether they do or don't have a valuation? Is that correct? From what I heard, then there's no valuation in that question.
They're saying that the owners in our group is challenging the current valuation as being too high. So maybe it's an estimate or...
Yeah, I guess if you've got a valuation and they're challenging the valuation, what I would want to know as a committee member is, well, where are your workings and who have you consulted that has a higher level of qualification than who we as the committee have consulted? So that's the first question I'd want to know. If there's no valuation, I think it would be a fair and reasonable thing to get a valuation done. For a property with 12 lots, I've seen valuations through companies like Leary & Partners. They come in around the $500 to $700 mark. And really, if you don't have a valuation, you do your due diligence and get one done is what I would recommend in that circumstance. Yeah.
Okay. And then we only have just one more submitted question that had come in prior, and then other questions we might try and address from comments that have come in. So this one's from New South Wales. An isolation valve under a unit's kitchen sink leaked and caused damage to the unit floor. The moisture has caused mould on the wall. The repair of the isolation valve was paid for by the owner's corporation. Who is responsible for the repair of this damage? Is it the lot owner or the owner's corporation?
Good. That's a very good question. So legal responsibility is always a question that is best answered by solicitors and judges, and there can be, in some instances, a process. So I guess really it would come down to a number of factors as to who was responsible for the isolation valve. Was it inside the lot and the lot owner's responsibility? Was it the owner's corporation's responsibility because it was an isolation valve on common property? The main thing in this instance is that the consequential water damage would form part of a claim under a strata policy. So I guess really the question then is, will it be a question for the owner to determine who's responsible and liable for the damage, or will it be answered by the fact that there's an insurance claim, an insurance policy that will pick up for the cost of that? The only other thing to determine if it is an insurance claim is who's responsible for the excess, and maybe that might fall back on who's responsible for the damage as to who pays the excess. So if, again, with the isolation valve, really you'd want to know who was responsible for maintaining that as the first port of call, and then obviously looking at your insurance policy as well. Yeah.
Okay, and as you would know, Tyrone, because you receive a lot of them, we have lots of questions around excess and who's responsible for paying the excess and who's responsible for the repairs to the damage. So thank you for answering that one. And then we've just had the lady that actually submitted the question about the current valuation being too high from the previous question has just written in to say, back to the WA question on an owner's challenge on property valuation, the quotes we have obtained via our broker included valuations. How they were obtained, we weren't sure.
Yeah, so again, I think in that instance, really, the committee has to demonstrate that they've done their due diligence. And from what it's sounding like, they don't have a document that they can show an owner to say, we got this qualified advice from a building professional, whether it be a quantity surveyor or other professional. And we view that this, that they were qualified to give that advice. I can't, from what I'm being told there, if it was me as the committee, I would spend the $500 to $700 or $400, whatever it is, on evaluation, and being able to answer with confidence that you've done your due diligence in that circumstance. That's what I would do in the circumstance.
Okay, thank you. Okay, we'll go through some of the questions that have been submitted. Sometimes I'm not sure which state they're from. So if the person's actually still in the chat, if they can possibly jump in and just let me know while we're discussing it. How does your company put forward a proposal for a Strata insurance policy based on last year's premium from a competitor without full knowledge of the commission structure, or even if there was any commission in the policy?
That's a good question. So we don't put forward proposals for last year's premiums. So I don't know that there's that.
Sorry.
Yep.
Sorry, Tyrone, I'll just jump in with that. One's from New South Wales. I'm so sorry to interrupt you.
I'm not quite sure that we work on last year's premiums for putting proposals forward. So how we will put proposals forward is very simple. We will firstly, if there are available insurers, seek to get quotes from the market. The second option that is available and that I do talk to my clients about is that there are certain insurers that will reserve to the holding broker. Firstly, obviously, the holding insurer will do that. And there are some insurers that will only quote one broker at a time. But we can still provide clients an indication of what our pricing would be for those policies if they provide us a copy of the quotes that they've received from those companies as well. So that's how we do it. Any quotes we submit obviously clearly spell out how we arrange our quotes. Yeah.
Okay, and then one from Victoria that's been submitted from John. Our OCM said that we had to include mechanical machinery breakdown in our policy to cover garage doors. Each unit has one, only personal use. Air conditioners, personal use. We have no lifts, just a group of townhouses.
Yeah, that's a good question. So that there isn't a requirement to insure for breakdown. And look, I really recommend clients consider breakdown when they've got lifts, central air conditioning units, high cost machinery around maintenance of a pool, so pool pumps and so on, and garage doors as well, but not necessarily for garage doors that simply service one lot, right? So you have to remember that breakdown covers just that. It covers the breakdown of that lot, of that item, right? So a breakdown is something that normally happens over time, and I guess can be due to wear. And it would be fair and reasonable that owners wear that expense as opposed to the owners corporation insuring for those things. But that being said, that would fall to a decision of the committee as to whether they did or didn't want to insure the garage doors for breakdown. Personally, if I was on the committee and that was the only breakdown item, I would probably see that we didn't insure for breakdown if the expense didn't justify it. Some insurers will insure breakdown for $100. In that instance, I would probably take the cover out. but then others it
Okay.
might be $1,500 to $2,000, and that you'd have to question whether the garage motor and the excess would make it worth claiming for that.
Okay. We had a question come in, or one of the comments is from Kylie from Victoria, and I'd just like to apologise quickly because we have another webinar coming up in 2 weeks' time, which is to do with Victoria specifically, and the question may have been allocated to that webinar rather than your webinar, Tyrone, but she's given me a little bit of information here, and I'm sorry, Kylie, if that's what's happened. So she has submitted a question from Victoria in regards to storage facilities and having no written rules and regulations in place, and how the storage areas are used, especially with hazardous contents. Does that give you enough information to respond?
Yeah, absolutely. I've been asked this question a few times, so it might be that someone's storing high hazard materials within their garage. So the short answer is, obviously, as an owner's corporation, you need to take reasonable actions to manage risk, and that would be something you would discuss with the owner. There's no specific exclusion in the policy for what is being and isn't stored within the garage, but if you view it a very, very high risk, it might be something that you want to discuss with your insurer or insurance broker about before you enter into your next policy when it comes due for renewal.
Okay, thank you so much. And I'm sorry again, Kylie, for missing that. And then she says it relates to shared common storage.
Yeah, again, yeah. So that would be one that you would seek specific advice for on the actual item that's being stored within the lot. Essentially, one of the issues with storage is that the owner's corporation, if it's within the lot owner's garage and therefore within their lot, there can be disputes that arise over what is stored in that. But I guess it really comes down to what it is. And if there is a concern that it's a high hazard storage issue, then you would speak to your insurer or broker and get advice around that when the policy comes due for renewal.
Okay, wonderful. Thank you. And she said thank you for that as well.
Right.
Okay, so we've had, this one's really interesting. I'm not sure again which state it's from because it's coming through the chat. We have had 3 windows fall from the common property windows to the car park below over a number of years. We raised the money to replace these windows. However, the committee do not seem to be taking the window replacement seriously. Are we covered if another window falls to the ground and hurts someone?
Yeah, so when it comes to risk management, that is a responsibility of the body corporate and owners corporation, and the insurer. I guess that the insurer doesn't impose exclusions around failure to take appropriate risk management actions, right? So if the committee have formed the view that they that the windows aren't a priority at the moment, that would be, and that conflicts with other owners. When it comes to the time of a claim, the only impact it has on your policy is that a personal injury lawyer would be able to access records from the owners corporation, and if they saw that there was an issue with the windows that the committee didn't action, it would simply mean that there's a higher level of negligence in the time of a claim. That would increase the cost of your claim and impact your claims history. So and it could mean that insurers would say, well, we see that you didn't take action and you've had this major claim, we probably won't offer quotes for you as well. So there's no specific exclusion around risk management practices, but be mindful that failure to take action and conduct appropriate risk management can have a negative effect on owners when it comes to their claims history, when it comes time to getting quotes for the insurance at renewal.
Okay, once again, I'm not sure which state this one's from, but I've got a question. Can Tyrone comment in relation to short-term letting and claims on loss of rent? In a previous claim, the short-term letting owner was seeking loss of rent at the short-term rate, and the insurer only paid out at a market value considerably lower than the short-term rate.
Yeah. Short-term letting really differs from policy to policy. There are some insurers that require you to have a rental agreement in place. Now, obviously, that's not possible or the case with insurers. So it will differ from policy to policy. I can see it's a WA one.
Yeah, sorry, you can see that. That's great. Thank you.
WA one. So it will differ from policy to policy, you really need to get advice specific to what the coverage is under the policy, and I guess really a good broker, if you're not being treated fairly in a claim, a good broker would put your case forward for you and I guess fight that issue. I'm happy to, again, as I've mentioned, to have a quick review for that particular owner if they want, as I do for all LookUpStrata readers and members. So if they did want me to look at the specifics of that issue, you can contact us through our website, stratainsuranceSolutions.com.au. Just mention the LookUpStrata webinar as well in that email. Yeah.
Excellent. Thank you so much, Tyrone.
Thanks, Nikki.
Okay, New South Wales, with a growing trend of developers building townhouse schemes where the total structure is a lot owner's responsibility, does the owner's corporation have the ability not to insure the property as it's not insuring common property but lot property?
Yeah, so I think it does depend on the plan. The basic guide that I give lot owners and strata corporations is that when you have a building with common walls and roofs, the owners corporation and strata building must insure those lots. Different states have got different guides around when you can insure it on an individual basis and you can't. Yeah, I know the Queensland legislation like the back of my hand. I'm not as adverse on the New South Wales legislation, but the general guide is that if you've got shared walls, that's a must insure. If you don't have shared walls and roofs, there may be a way that you can insure on an individual basis and not through the owners corporation. But I'd need to read through the legislation further on to answer that question. Happy to take that as a question that we answer in a future blog as well. Yeah.
Okay, wonderful. That sounds really good. We've had a couple come in to do with asbestos. So the committee are aware of asbestos fire doors, but do not wish to disclose to the broker or the insurer. This one's from Queensland. They've engaged an insurer directly. What should the body corporate managers do in this scenario in terms of due diligence and compliance?
Yeah, so the question really comes down to, firstly, does the insurer ask about whether there's any asbestos in the building? That would be your first thing. So obviously, if they do, there's a definite requirement to answer correctly and correctly on that. The other thing that you need to look at with asbestos is that I know that there are policies in the market that have exclusions around asbestos as well. So from the strata manager's perspective, I think that really, and then the third thing is, do you have a duty to disclose that as a matter that's relevant to the insurer's decision to insure you? That's questionable. I probably would suggest that you err on the side of caution. From the strata manager's perspective, I would probably say to the committee, look, this could be a matter that you need to disclose to the insurer. Your failure to do that could mean the insurer voids the policy at the time of a claim, and I guess put it back on the body corporate and the owners corporation, that they should consider this in not disclosing. Now, if you've done that as a strata manager, you've really fulfilled your duty to the client. The next best, or the better thing to do would be just to refer that to the broker and have them deal with that issue and forward the advice from the broker to the committee.
Okay, and then we have one from Far North Queensland, and I know we have spoken about this at the beginning briefly, but in relation to holiday letting from Far North Queensland, insurers are declining to quote on policies for any property over 50%. Others, such as Suncorp, will only quote up to 40% holiday let. What can be done for these who are over these percentages to obtain a quote for insurance?
Yeah, I do just have to say that the situation in North Queensland and Northern Australia is very, very dire. There are many buildings that are struggling to find insurance. The main issue is, can the body corporate tell owners that they can or can't use holiday letting within their lot? So obviously that's a very hot topic at the moment. I don't believe that the case law is in favour of that. So really, I guess it comes down to going to the entire market, finding all your available options, and I guess if there is a requirement for certain percentages, it might be talking to some of the owners as a committee and saying, hey, we need to bring this down. Is there any way that we can, instead of letting these lots out, can we have some owners that elect to not holiday let their properties? And failing that, I guess it's looking at what are the other options available with other insurers. But you know, I'm hoping that in the coming years and leading up to federal elections, that maybe there might be a change of stance from the government on how they handle Northern Australia. My personal preference would be for a government-backed reinsurance pool corporation to provide catastrophe insurance to insurers for things like cyclone and terrorism and other perils that they're not insuring. But time will tell as to how the government, they've had quite a while. Time will tell as to what they do, or if they do anything about it. Yeah.
Okay, now I think we've probably grilled you enough, Tyrone. That's covered the majority of the questions. We do still have a few that are outstanding. And I just wanted to also mention, not everyone can see the comments because some of them are just coming into us as panelists, but we've had some lovely comments coming through to say thanks very much, very helpful comments. It's been really worthwhile sitting in on the webinar. So we thank everyone for their feedback. That's fantastic. So I just wanted to say, just trying to find a place mark. But yeah, it's been wonderful. We've had really great numbers. So thank you everyone for taking the time out to join us today. If you did submit a question and we weren't able to get to it for any reason or we've missed it, please, we'll stand by and we'll get a response out to you over the next week or so. And then if you submitted a question via chat and we ran out of time to actually cover that with you, please resubmit the question if you haven't had a response. I tried to copy and paste them down into this document, but it's really hard to jump in there. We've had so many come through. So if we did miss you and we haven't mentioned you at all, just jump onto the LookUpStrata site and we've got our Ask a Strata question under our Help tab, and you can submit the question that way and we'll get back to you. Before we go, I'd just like to say a really big thank you to Tyrone for providing all of this useful information today. And Tyrone, it's been a pleasure as always. And I believe that you have an announcement of some exciting news that you'd like to let our audience know about.
Yeah, look, thank you very much. So I just, well, thank you for giving me the opportunity. You saw on a LinkedIn post and gave me the opportunity to quickly announce. I won't take up too much time on this issue, but I've recently gone into business with a friend of mine setting up Best Injury Lawyers. We're a plaintiff injury law firm. We work on a no-win, no-fee basis, and we cap our fees at 30% to ensure that clients get the lion's share of any settlement. So I guess the type of things that we assist people with is motor accidents, workplace injuries, and other injuries in public areas. So thank you for giving me the opportunity to talk about Best Injury Lawyers, Nikki. Thank you.
Definitely, Tyrone. We're happy to support you. You've been a really great help to LookUpStrata, and for a long time. Like, we've had a relationship for quite a few years, so it's really, really great to support you, and we wish you all the best with that endeavour.
Thank you.
Okay, so thank you so much for joining us, everyone. We hope to see you in one of our regular webinars in the future. As I mentioned quickly earlier, we have a Victorian webinar coming up on the 11th of May. So if you are from Victoria, just keep an eye out. You can register for that event currently, and the registration link appears appears at the top of our Monday and Wednesday newsletters, and we'll be doing these on a regular basis, so we should be doing them every fortnight. So just keep an eye out for what we've got coming up. It can be state specific or it might be national. Sometimes we choose a particular topic and we delve into that in a little bit more detail. So thanks for your support, everyone, and yeah, lovely to see you here today. We'll see you next time.
Thanks, Nikki. Thank you.